Hey guys, welcome back to the channel. My name is Jan. I'm the CEO of Acquire.Fi. We've been away for at least a week, but time to get back on track and show you guys what's been happening in the market. We have Andrew here, that is the professor, rainmaker of the graphs, and we have Nathan, who was a little bit sick today. But how are you guys?
Good, doing good.
Good. Definitely had a great week last week in Dubai for token, and a little sick today. I don't know if I pick something up there or what, but it was well worth it regardless. Made a lot of good connections. Those conferences are always really great to kind of get a pulse on the market of like what's actually going on. You can read the headlines, but actually getting out there, getting in the real trenches, talking to projects, talking to founders, talking to fundraising, teams, talking to funds themselves, just kind of get an idea of what's actually going on in the market. So I'm sure we'll dive into that here after the charts. But overall, first time in Dubai, it was a great trip. And I think we'll be getting quite a bit of business done off the back of that.
Nice. Did you guys get to ride any camels?
We did not see any camels. Andrew, how's the bearish movement, Mr. Bear?
Oh, I'm definitely leaning more bearish again. we had a nice few weeks of bullish action, right? Like since April, it's just been straight up. But now I do feel like we're coming into some kind of correction window. We are in May now. The old expression is sell in May, walk away. So there's usually a bit of a seasonal dip. And especially after like a nice long rally like this, we're right into resistance. So right into our short reload zone, which is the 61.8 to 78.6. And then as you can see, we have 200 SMA acting as resistance up here. We also got 8 9s coming out on the Tom de Mac. And momentum is starting to kind of taper off a bit. MACD is kind of rolling off. We're not quite overbought, but we are getting closer and closer. But I do see like it is already starting to break down. This is kind of an inside bar failure right now. And a lot of this is predicated towards the FOMC coming up. It's pretty much tomorrow night for us. And so I think the market's just kind of de-risking, and it makes sense as like, during these liquidity events, you just kind of want to square your books. Usually you don't want to be holding too many things because it's just a lot of uncertainty. But I do believe that they're not going to be cutting rates. And I think the market's already kind of expecting that. And so now the market's going to cool off. Maybe this is the May sell-off. And then hopefully if we do correct here, we don't fall too hard. But as you can see, even on the NASDAQ, we are getting close to that resistance level. And so things are kind of slowing down. So generally, if equities are going to, break down, then, cryptos should follow suit. As usually don't see the markets go opposite ends. So moving over to Bitcoin and ETH. For the last couple of weeks, I talked about this reload zone of seeing like, okay, like we are in kind of areas of resistance. And now, as you can see, we are starting to break down quite a bit. So, once we come into these short reload zones, this is where you want to be considering shorts, not longs. Generally, this is where resistance kind of steps in. If you look at the momentum as well, we're actually starting to break down. We actually have a bearish divergence on the MACD now. And it's actually crossed over to the zero line. So bearish div is in. We are overbought. And so now we all have location. We got momentum and structure. We're starting to form a bit of a double top here right now. Not really the structure you want to see. And so I think really we had a really nice strong rally, nice bottom coming in April. We had a nice 3 weeks of just straight up. So it makes sense for the market to kind of pull back now and correct. So it doesn't mean the bull's over, markets are probably going to have to pull back a bit. There is a gap on the CME chart. If you look over here, we do have a gap around that 92, 91K area. So I do feel like they're trying to probably fill that as that's a pretty big liquidity window there as well. So as things kind of break down, momentum break down, that's kind of the first kind of area that I would expect to see price fall down to. And then, if it doesn't hold from there, then we can kind of look at some of these 38.2s. So 88K is kind of where I'm looking at. If we do fail to hold these lows here around 92, then my next area would be around 88, as that is the first stop support level. And then, if we can't hold that, then, obviously reload zones, 61.8 to 70.6. That's kind of ideally where I would want to be longing. But yeah, I mean, we'll just have to wait and see how that resolves there.
So basically, no buying until we see 88 or 92.
Yeah, I mean, more so like wait for structure, like for one, like, even though if we come into these levels, right, we want to see momentum not pointing to the downside. We want to see some kind of structure, like some kind of double bottoms, like kind of like how we got these little double bottoms here, or even like an inside bar, right? Like you want to see these bullish type signals when you come into these levels, because levels is one thing. So location is just one part of the setup. What you want to see is confluence with like momentum and structure as well, and then that's how you get the best results usually. But those are the two main areas that I'm looking at. It's 92K and then 88K for now. Ethereum is looking weak as well. Ethereum actually has a double top working right now. It's got a bear div working as well, and we are overbought. So we have location, which is the short reload zone, which is that 61.8 to 78.6 range. We got momentum, which is bear divs, overbought conditions. And now we got structure, which is double tops. So that's not really what you want to see when you want to long. Obviously, Bitcoin and ETH, they move hand in hand. And just like the equities market, everything is starting to correct because we've had a really nice rally, since April, like, nice 30%. And so, if things do start correcting here, for ETH, I am looking at, again, that 30.2 for stop. I do like this area around 1600 just because the fact that is where that previous double bottom broke out from. So that would be just a retest of the original breakout. And then we can get, these Wyckoff checks. And if it holds and we can, consolidate and break out, then we know that that is officially the bottom. So until then, I'm pretty much hands off. I've actually liquidated quite a bit of my portfolio, starting to just hold onto some cash. And then I'm just going to wait for these dips to come in. Ideally, just waiting to get past this FOMC event because I do feel like it's pretty much just what the market's waiting on right now. So there's really no point in like trying to front run or chase or anything like that. Might as well just let the clear signals and structures come in. So that's kind of like what I see right now for Bitcoin and ETH. And then if we go over to the altcoin stuff, if we look at the dominance chart, obviously Bitcoin dominance is peaking back up. Stablecoin dominance is also peaking back up. And then all three of our alt indexes are putting in double tops and breaking down already.
Oh,
so
we can't see it. Yeah.
I'm sorry.
There we go.
My bad. So now we got W's working in the stablecoin dominance. So obviously money's flowing back into stables, getting out of crypto and blah, blah, blah. Bitcoin dominance is obviously perking up as well. And then these three altcoin dominance charts, they are double topped and breaking down. So seeing this makes me feel very...
that stablecoin is going up pretty high.
Yeah, we got double bottom
right?
working. So yeah, it's the green one. So when you see that, that risk off is like pretty much winning. So like you're better off just like, cooling your jets, not chasing longs or trying to go too heavy right now. Probably better to be on the short side of things really. But until we start getting these W's again, like I do think alts are in trouble. And that's mainly why I actually decided to close out a lot of positions yesterday because I did see this breakdown come in and starting to get a lot of confirmations there. So, if you look at across the board, everything is just starting to break down, as you can see. So I don't feel very confident holding anything really going into this FOMC. And then just, we let the market reset, let it correct. And then if the market is really bullish, we should be able to just kind of reverse and start holding and consolidating again. Because I do feel like the next leg of consolidation, as long as we don't break new lows, then that is going to signify like, okay, this potentially is the actual bottom. So this is, we're getting more and more into areas of interest in terms of like levels. This is why also I recommended to not chase these up moves because the market eventually is just going to come right back down to levels. Even Sui, right? We got a lot of double tops coming in and stuff. So I would say just, cool your jets, have some cash ready, wait till the FOMC, wait a few days even after the FOMC, and then wait for those setups, wait for location, wait for momentum, wait for structure.
What's the overall view? What's going to happen on FO?
A whole hell of a lot of nothing.
Meeting.
FOMC, I believe they're not going to cut rates, and I think the market's going to nuke. I've been talking about this for a couple of weeks now, where I've been saying I do feel like this is a sell-off event, and it would just be a good timing as well, because if you look at the seasonality stuff, May is typically where you get the correction. So what better event than FOMC? And as you can see here as well, if you look at the tech sector seasonality stuff, the first couple of weeks of May, we actually start selling off pretty heavily. And this is kind of where we are now, right? We're heading into that second week of May, and this is kind of the correction that we are expecting to see. And then the good news is that will set up the bottom for hopefully the summer rally that we're all expecting. I do believe that we're going to have a pretty strong summer rally. If we look at seasonality stuff, we also look at the Jan barometer. A lot of the stuff was pointing bottoming coming into April, May, and then rallying off into the summer all the way till fall. So that's kind of what I'm trying to play out.
Yeah, I don't know about July. I think history-wise, it's been very bad for crypto, but maybe in the tech stocks, it's a little bit different. I feel like everyone in tech or in finance are just in their yachts or in summers or in France drinking wine and doing nothing. But
they're off to the Hamptons, as they say.
Yeah.
Yeah. So I like looking at this average Bitcoin returns over the last pretty much the life of Bitcoin. And generally the first 6 months is quite bullish, and we have pretty good returns. And then it just kind of slows down into that late summer, August. September is always a bad month, even for equities, because that's when all the professionals come back, and then everybody just kind of starts cleaning their books again. The summer euphoria, whatever happens, they just clean it up. And then my all-time favorite is always in October. Buying in October, November has always been the sweet spot for even just equities. And as you can see, most of the returns are actually in October and November, it looks like. But so far, May is starting off pretty bad. On average, it seems like May is supposed to be kind of bullish. But right now, it looks like we're kind of starting off negative. If you look at the past 4 years too, it's been kind of bad. A lot of the selling kind of happens in May, June. But I'm hoping we break the cycle this year.
I don't know, man. But let's hope.
Yeah, it's a lot of hopium right now, but it's hard to predict these things. So I'm just kind of going by the charts right now, and then using this as just kind of a guideline of what potentially could happen.
No, this is a good reminder. Guys, if you guys trade, look at what Andrew is doing. Look how tactical precision. There's no emotions. There's nothing. Find the good placements. Find the good graphs, and then dedicate yourself, or do DCA. Two different approaches that work really well.
Yeah, the martingale strategy works very well. I would recommend it only really on Bitcoin or ETH. Altcoins are tough because they tend to bleed pretty heavily, but something like Bitcoin, it's very durable, it's very stable, and it's the main coin that everybody is trading, right? So you're almost guaranteed that price will eventually come back. Altcoins, not so much. A lot of delistings and blah blah blah. But yeah, like Larry said, wait for the setups, be patient, and
see what happens.
More sitting on your hands, just what everybody wants to hear.
Hey man, we had a very good 3 weeks there. It was a very nice 3 weeks at rally. We got some nice profits in here and there. So,
no, I agree. Nathan, anything on your side? You're more on what's happening overall.
Yeah, I mean, you guys mentioned FOMC already. That's the gonna be the determining, probably biggest story, biggest factor for not just this week, but for the rest of the spring going into summer. I don't think we are expecting anything exciting out of the Fed. Just more of J Powell's nothing burgers, bookending every statement and not cutting rates, regardless of the fact that we're well under 2%. I think even the government rates are going to show that we're under 2%. Trueflation has had us under 2%. I think down as low as like 1.3, 1.4% for months now. There really is no reason for them not to cut it. But that's politics. So maybe we'll get a surprise. Maybe the Fed will come out of nowhere and cut rates on Thursday. But I wouldn't hold your breath. I'm expecting, as you mentioned, continue to see some drops here. The catalyst for that being no rate cuts in May, but June, July, definitely more possible. We've been saying Q3 rally for a while now. No one likes the brutal, boring summers, but it kind of looks like that's what we're gearing up for another one. The sell in May and go away might just be the unbeaten strategy that continues to be unbeaten. So other than that,
I have a question about this FOMC, like FOMC meeting. Like, if everyone are expecting that there's not going to be any like rate hikes, or we're not going to cut rates, shouldn't the market be like neutral?
Yes and no. I mean, anytime there's bad news, like we want the rate cuts, we need the rate cuts, we don't get them. I don't think we're going to see an immediate 10% candle, but it's just going to continue to bleed the wrong direction versus. But you're right. Most of the time with meetings like this, the only thing that really sends markets one way or the other is unexpected information. So, yeah, I don't know what your thoughts on that, Andrew.
Yeah, so like the thing is like it's more so it's just like a disappointment. So the market already I feel like the price action we've seen in the last 3 weeks is like the market front running the expectation, knowing that they're not going to cut it. So when the results come out and it's as expected, people are like, oh, okay, it is disappointing as we thought. So now the market, auto corrects whatever we front ran. The main thing will be listening to Powell, because usually after the rates come out, there's a conference. So listening in to seeing whether Powell talks very dovishly or hawkish. So that's what it's really going to come down to. So the rates, since we already know they're not going to cut rates, or it's what we're all expecting. The next thing would be like hearing how Powell talks about like what is the expectation for the next rate.
Yeah, I don't know. I'm not expecting anything, but I think BTC is still holding up pretty well compared to others. And you showed the graph that, hey, BTC dominance is also going up, which is again like, all right, like how much up can it go before it starts going down? But
yeah, we still haven't gotten the major catalyst that we've been looking for to really send this second half of this bull run. We still need the rate cuts, still need quantitative easing, still need these tariff issues to get settled. I mean, the tariff news has been a lot quieter, but it's ongoing negotiations. Nothing's been settled there yet. So until we get some of that stuff, more clarity, I mean, M2 supply is going to continue to stack up. Those funds, those investors, the number one thing they're looking for is certainty. And there's far too much uncertainty in the markets right now. So until we get something more firm for them to want to move towards, it's going to be a waiting game.
Yeah, no, absolutely.
Outside of that, I wanted to chat a bit about the conference last week. Jan had a viral post on LinkedIn the other day. Hey, although, I mean, 50 likes and 9 comments on LinkedIn is actually pretty impressive.
Nice.
Like nobody engages on LinkedIn whatsoever anymore.
I'm
good
very
for
good
Jan,
at
but, yeah, posts aren't great, but I don't know. Well, I guess Jan, I'll let you give your opinion. What do you think of the conference there in Dubai?
Can you put it on, by the way, or up?
I am. There he goes.
There we go.
I did switch. All right.
Yeah, I mean, like we go there every year, right? Like this was your first time, actually.
Yes,
So
first time in Dubai.
maybe hearing your opinions at some point would be good. But like, I think we are still bullish. I think there's new family offices, traditional finance people coming in play. Uh, we saw a lot of different like service-based companies coming to us and talk, especially smart contract auditors. People, if you guys come to me at the conference and try to pitch me a smart contract audit 3 times in a row, I don't think I'm gonna be that guy taking the bait. But
Jan had
no,
some
but
fun
yeah, sorry.
interactions with these smart contract developers or auditors.
But yeah, like everyone are talking about three things. It's either RWA. I was lucky enough to be in a panel and talk about it. Actually, I did not talk a single sentence in my point of view about RWA, but here we are. Deep in, still real, still a lot of people building, and of course AI. But on RWA, it's tokenized T-bills, like year-bearing assets that are very hot. There's still a lot of real estate companies coming in play. Obviously, from their side, they're trying to get more liquidity. But from my side, like people that know Raise, so Raise investment vehicle to basically invest in different real estate assets. I don't see the difference there. It's just opening up more liquidity. There's still a lot of sexes that are dominating like ads and ad spaces. I think the best part is so far where Nathan went away. I don't know what happened. There we go. We're still alive.
Yeah.
Another thing, governments are very heavily involved. We were lucky enough with Nate to meet the Sheikh of Dubai, or the president's son, I think. Very interesting things happening there. But yeah, we're maturing. So I think that's a good thing, right?
Yeah, definitely. I think probably my biggest takeaways from the market were how many institutions are and nation states are really starting to get into the Web3 space. A lot of Web2 crossover coming into Web3. We met more and more people that are from more traditional funds that are now interested in investing in Web3 stuff. We took a bit different route. We didn't go to the main conference, and for the first like 3 days we were there, we really didn't go to any of the side events. It was just face-to-face meetings. But overall, people are still bullish on key sectors: RWA, stable coins, DePIN, DeSci. DeFi is not going anywhere. AI is obviously still on everybody's lips. But definitely noticed the lack of projects or new projects they're building. We know how bad the pre-sale market's been for the last almost probably 12, 15 months now. So it wasn't super surprising that there wasn't a lot of projects there. If they haven't launched, if they haven't fundraised and got any money. So that was interesting to see. Most of the time we at these conferences, there's a ton of new projects that you run into. It was mostly marketing agencies, market makers, service-based businesses like, Jan mentioned smart contract auditors, things like that. That was a bit different there. But overall, really, really great meetings. All the meetings we set up were mostly with clients and partners. Had some great meetings in terms of moving forward with some OTC and some M&A deals. I think you guys should hopefully hear some good news from us on that front here in the next. These deals move slow, but relatively near future, next month or two here. Hopefully we have some positive news there for all of the Acquire.Fi community members and holders out there. Overall, great first experience in Dubai. Very busy. I didn't get a lot to do any touristy stuff. I didn't get to go ride any camels or drive around in Lambos in the desert, but maybe next time.
Yeah. That was good to hear. It was very productive.
No, I was very productive. I think the meta is that the OTC market is very hitting on. Like, we talk with a lot of tier 1 projects, meaning like people that are, or projects that are in the top 100, and they're all basically raising. So I think that's the new meta. There's a lot of liquid funds, but yeah, if you are a very good fund and you have a good name, you will get a lot of flow. And I think this market is quite brutal for new funds, especially. And I think I met at least 2 funds that I met 2 years ago, 3 years ago that was not existing anymore, or were basically saying that they're gonna be selling their assets and going away. So yeah, it's been hard.
There was a bit of that, but at the same time, lots of family offices very interested in what's going on in the Web3 space. A lot of new funds that are looking at different strategies involving DeFi, OTC, even some acquisition talks going on. So pretty cool stuff.
No, I think this is good. I think we're in at 25. We can stop. What do you guys think?
Yeah, so one last thing I was going to say is probably the most, maybe not bullish from a number go up perspective, but the most bullish sentiment I saw from talking to people is the real change we're seeing in the market of getting away from just bullshit tech ideas, bullshit speculative projects where you go raise, $5 million off of a deck, and everybody focusing on actual businesses. Like, we have blockchain technology, we have cryptocurrency as a technology, we have the Web3 space. Like, these are all very powerful tools that we can use to build businesses. And we really got away from that. It was all like, here's a new flashy hot thing. Chuck them, $5 million, $10 million at it, and then nothing ever comes of it. But more and more things are, niching back down and cycling back to, you need to have a real business if you want to get invested in, or, if you want to get acquired, if you want to be successful in this industry. You need an actual business model that generates revenue, and builds a product, builds a service, does something to actually help, people solve a problem in our industry. So that is overall really, really bullish to see. A lot of the new projects that we're seeing come on board us, with RWA, DPIN, DeSci, stable coins, tokenization of different type of assets, like those have real world impact. Those are real businesses. They actually do something that is going to, help make things more efficient, solve a lot of problems in a number of different industries. So that for me is the most kind of exciting and bullish thing, I guess, to take away from Token.
Nice. So essentially the space is maturing finally.
Yeah, exactly. Yeah. And a lot of people were asking, like, oh, mergers and acquisitions. Like, I didn't know that was even a thing in Web3. It's the industry is old enough, maturing enough that there are enough businesses now that have revenue, that have a business model, that acquisitions are relevant in this space now. Whereas, sure, maybe the cycle or two ago it might not have been. Few and far between. But it's an exciting space to be in right now.
Nice.
That's a good wrap up, Nathan. Very good said. Yeah, I think the same way. Like, if you have revenue and you have a real business, you actually have a chance to sell. So, but yeah, I guess good to wrap up here. Please, guys, join our channel. Please follow Andrew and his trading channel. It's very good. He posts there almost every day something. And if there's any alpha from us, we're gonna be sharing it in Tier 5 channel. Please like, subscribe, and follow us.
Thanks, guys.
See you Friday.